Hey guys, on this video, we're gonna talk about unlocking private equity, how to invest like the rich without all the fees. Let's get started. So what the heck is private equity? Let's break it down in a very simple way. Imagine you and your buddies, see a struggling ice cream shop. You're like, you know what? I think we can do better. So you guys all pull your money up and you end up getting some money from the bank and you buy this ice cream shop. You're like, all right, now what? You're not just gonna sit there. You're going to look at operations. You're gonna get better flavors. You're gonna look at your competition. You're gonna get some killer marketing, and boom, sales go up, operations go up, you can become more profitable. Then you're like, hey, you know what? Let's buy the ice cream shop 2 cities down and we'll make it the same thing, and we'll have the even better flavors, and we'll market to the schools and the kids and all that stuff. Boom, now you have 2 ice cream shops and they're both crushing it. So after all this hard work and after a couple of years, you decide to sell all of this for a nice huge profit. Pay back the banks, you and your buddies have some money in your pockets and you're really excited. Guys, in a nutshell, that's private equity. And so essentially you're finding an undervalued business, improving operations, efficiencies, management, profitability, and eventually selling it for a nice large profit. You can do this flipping houses. We've done this in apartments. We at Viking Capital, we buy apartments that are either performing okay or there's still some potential and they can outperform, and we improve them, renovate them, interior, exterior, rebrand them, put in a pickleball court, whatever is needed to raise rents, increase operations, and then boom, in 3 to 5 years, we sell it for a large profit, which helps our investors and ourselves as a private equity company. What you're doing in private equity is essentially you're a superhero. You're seeing potential that others don't, and you're going in and capitalizing it, and you're taking action and creating more value. How come private equity gets a bad rap? Well, historically, they came on the scene in the 1980s. They were called the barbarians at the gate, corporate raiders, and sometimes they would take apart companies and break companies apart and sell them off for pieces because the piece is worth more than the whole. But nowadays, really, in the changing financial landscape, private equity is a really powerful option for many companies to exit if you've hidden a certain level of profitability and growth, but you can't go beyond that because of your own limitations. In fact, private equity is trending heavily in the medical space. I know a lot of physicians' practices that are being bought, lumped together, and eventually rolled into a large organization and being sold for multiples on what they're worth. This is very exciting. In fact, I have a buddy of mine who's in Phoenix. He's a cardiologist by training. Him and his wife own a dermatology, aesthetics, and vein practice, and they built multiple locations in the Scottsdale, Phoenix area. And after about 8 or 9 years of running it very well and operating at a top level, they attracted a private equity firm, which bought them, lumped them with other groups, and then they were able to sell for $100 million or more. So now I know what you might think. Hey, this sounds great. How do I invest in these entities? Right now, there's SEC regulations. Usually it's high net worth individuals, family offices, pension funds. These are the people that want to invest. And why do they want to invest? It's because it's so lucrative. So as LP investor in this private equity fund, you can get 18.6%. Normally, these kind of returns are very difficult to get. People get about 5.5% if they use something like the MCI Global Stock Market Index Fund, which is essentially all stocks over 23 countries in the top developing countries in the world. And the other cool thing is, in down years, such as in 2022, the private equities only lost 4.3%, while the general market dropped 17.2%. So you can understand the power of downside protection and amazing upside. Are there any red flags or any concerns with private equity? Well, it's not a red flag or a concern, but there's an expensive enjoy being part of the club, right? The private equity companies themselves take some hefty fees. They take a 2% management fee for all assets under management, and they take 20% of the profits on the back end when they sell the company or when they make it a public offer. So it is definitely lucrative for them as well. But here is a challenge for the common investor. If you really want to get access to these things, you have to be what we call an accredited investor. So what that means is you need to have at least $1 million of net worth outside your primary home, or your annual income has to be at least $200,000 for 2+ years, right? So then the question really is, how do I get in? How do I get into access to these private equities and not have to deal with the fees or the sort of the restrictions? And so there is a back door. So know that there's 3 main private equity firms. These are the largest in the world. It's KKR, Blackstone, and Apollo Global Management. The returns are mind-blowing. Over the past 5 years, KKR had a 17.3% growth, Blackstone had 26.3% per year, and Apollo Global had 22%. So on average, it was almost 22%. And that's compared to the S&P 500, which is only 12% over the last 5 years. And there's more and more opportunities for these private equities to grow in this market. And the reason why is, commercial banks are starting to pull back on lending. And these private equity firms, they have a huge war chest of money and credit that they can use to leverage and pull off deals. The companies are starting to buy now because of downgrade in values, softening of the economy. They are cheaper and they can thus create these amazing profitable exit structures when they buy, either through IPO or through private sale. The question really is all private equity amazing? Is there any red flags or is there any concern? The answer is yes. For the smaller private equity companies out there, in fact, there's something called the S&P PE index or private equity index of the 80 companies. They went down 28% last year. So moral of the story is not all private equity firms are created equal, and you want to invest with the biggest and the best. And so the key is go big or go home. So invest in Blackstone, invest in KKR, invest in Apollo. But here's the key. Invest in them as a stocks. They are publicly traded companies. So you can invest in their stocks. So now you don't have to pay the fees and you don't have the restrictions of being an accredited investor, and you get a lot of the upside and you get downside protection. If you want to invest like rich and the wealthy without the restrictions of accredited investing or the downside of paying the fees, consider investing in stocks. Almost a 22% return versus a 12% from the typical S&P 500. All right, guys, keep crushing it. I'll catch you on the next one.